Welcome to The Explainer. So today we're jumping into a huge economic mystery. We all feel like AI is changing everything, but for years, if you looked at the official numbers, well, it showed basically nothing. We're going to investigate if a silent economic boom has maybe, finally, just begun.
And this famous quote from the economist Robert Solow, it just perfectly captures this puzzle. Way back in 1987, he was looking around and seeing computers transform offices, but national productivity was just flat. It points to this really strange lag we see with big new technologies. You can feel the change long before you can actually measure it. And for the last decade, we've been saying the exact same thing about AI.
And this is exactly what we've been living through. On one hand, you hear these incredible stories, right? Like Andrew Yang talking about a family member who used AI to build a whole website in just a few minutes, something that used to take a professional days to do. But on the other hand, you look at the hard data, and productivity growth has been stubbornly low for almost 20 years. Talk about a disconnect.
Okay, so let's get into it, because the very first major clue that this disconnect might finally be ending came from a place almost no one was looking, a totally routine data revision from the US government.
All right, so here's what we thought we knew. The Bureau of Labor Statistics, they first reported that the US economy had added a net 584,000 jobs last year. A pretty solid, respectable number. But then they issued a massive correction. The real number wasn't 584,000. It was only 181,000. So in an instant, more than 400,000 jobs that we all thought existed, they just kind of vanished from the data. And that single revision, well, it completely changed the entire economic picture. Now, here's where it gets really interesting. You have to understand how we measure productivity for a whole country. It's actually a surprisingly simple formula. You just take the nation's total economic output, its GDP, and you divide it by the total number of people working. Okay, so here's the crucial logic. The economic output, that GDP number, it was still incredibly strong. But if the total output is high while the number of people creating it was suddenly way lower than we thought, well, if you think about it, that can only mean one thing. Each worker was producing a lot more value than we'd been measuring. And in fact, when economists ran these new numbers, they estimated that productivity growth for the year will probably hit around 2.7%. To put that in perspective, that's nearly double the average pace we've seen for the last 10 years. All of a sudden, that silent AI boom might have just gotten really, really loud.
So, okay, we now have a piece of hard data that seems to point to a productivity surge. But why is it happening now? Well, one economist, Erik Brynjolfsson, over at Stanford, he has this really powerful theory that might just explain everything.
His whole theory is built around something called general-purpose technologies. So think about things like the steam engine, or electricity, or the internet. These things don't just make one industry better. They create a new foundation that transforms the entire economy. And his argument is that AI is the newest one on that list.
And these big technologies, they tend to follow this predictable pattern he calls the productivity J-curve. First, you get an investment phase. Companies spend billions on new tools, new training, and that actually drags productivity down for a while. But once that new foundation is laid, you hit an inflection point, and you enter what he calls the harvest phase, where productivity doesn't just grow, it explodes upwards.
So what Brynjolfsson is saying is this, that surprising job revision data? That might just be the first piece of concrete evidence that, with AI, we are finally tipping over the edge of that J-curve. We're moving out of that expensive investment phase and into the explosive harvest phase.
But in any good investigation, you have to look at the counter-argument. Is this jobs data really the smoking gun for an AI boom, or could there be something else going on?
So an economist named Guy Berger decided to dig into the numbers. And his logic was pretty simple. Hey, if AI is the real reason for this, you'd expect to see the jobs slow down in white-collar jobs, information-based roles. But what he found was that the biggest revisions were actually in sectors like government, mining, and transportation, not exactly the front lines of the generative AI revolution. So his point is, maybe this one data point is pretty thin evidence to declare a whole AI boom.
So, while the debate over that one government data point is still going on, if you kind of zoom out, there's a much clearer and maybe more worrying trend showing up. One that tells us something big is definitely happening in the job market, especially for office jobs.
And this chart just lays it out perfectly. It shows the number of job openings in professional and business services. So think finance, consulting, tech jobs. That number is now at an 11-year low. But look closer. It's even lower than it was at the absolute bottom of the 2020 pandemic lockdowns. The rate of hiring is basically on par with the 2008 financial crisis. This isn't a theory anymore. This is starting to look like a white-collar recession.
And this is not some niche concern anymore. It has gone completely mainstream, with political leaders all across the spectrum starting to sound the alarm. Republican Congressman Jay Obernolte, who actually has a master's degree in AI, he's very blunt about it. Job displacement is coming, and we need to get ready.
And from a completely different political viewpoint, you have Senator Elizabeth Warren voicing a very similar fear. There's this growing consensus that a major disruption to the labor force isn't some distant possibility. It's a present reality we need to start dealing with.
So where does all this leave us? Well, the case for an AI-driven productivity boom isn't totally closed, but the entire nature of this investigation has fundamentally shifted. And this is the crucial point. We are no longer just telling stories about what AI might do someday. We have officially moved out of the world of anecdotes and theories and into a fierce debate over what the hard economic data is telling us is happening right now.
And that's really the key takeaway here. The evidence for a massive economic shift isn't just a feeling anymore, it's showing up in the numbers. The debate is now about what those numbers truly mean. So the real question isn't if a transformation is coming, the transformation is here. The real question is, are we ready for the answers we're about to find?